Upwards and onwards from here, or were you going to get this sideways trading many people have been predicting for a while?
James, overall, while it was a fantastic bounce back by the Australian share market, it was a bounce back which was led by those defensive areas. We saw areas like the staples area outperforming. The banks did extremely well. Westpac was up by 2.9%. Even the regional banks, we saw Bank of Queensland with a gain of 3.5%. But one part of the market which did not participate in this rally was the material space. By the end of the session, we saw it flat, and in fact, BHP was down by 0.5% and Rio Tinto was down by 0.1%. So while on the surface this bounce back looks quite bullish, Shanghai was down by 3.6% yesterday. It's bounced back by 0.9% today. If we have a look at the cause of what has got the market a bit jittery, it's really the property space. And yesterday on the Shanghai Composite, we saw the property space down by 9.3%. Today, we have not seen a rebound in that space. In fact, the property space in China down by 0.6%, and it explains a lot of why the material space on our market today really didn't participate in this big bounce back today. If we have a look at some of the comments coming through from our big miners, we've seen Rio Tinto come out to reiterate that it thinks the bounce back in the iron ore prices is a temporary one because of restocking in China, and over the next 18 months it sees iron ore prices back at 100 US a tonne. So that's not very bullish for the material space. And in terms of the technicals, we're seeing some important levels as well. If we have a look at a 2-year chart for BHP Billiton, over the last couple of weeks, we've seen a very important level, $39 being tested. And of course, we've seen a failure of that level, and we've seen a bounce back under $36 for BHP Billiton. And we've seen the same type of thing with Rio Tinto now as well. This is a 2-year chart. Once again, we tested that $72 mark, which is an important level. We failed that level, and we've seen a pullback to $64. So consolidation on the Australian share market, and really the gains today led by that banking space as well as the consumer staples space, and the materials part of the market not really participating. We did also see quite a strong pullback in the energy and the industrial space of the market in the second half of the session. So a great session for the Australian share market, but in terms of sectors, it was really pushed along by some of those small defensive areas.
And look, just on the banks, Julia, some of the movements today, very, very impressive. ANZ up 1.8, NAB up 1.6, the worst performer. CB up 2.3, Westpac up almost 3% today. Any indication as to why we saw such positive moves?
Look, the chatter in the market is that we will see an out of RBA decision rate fall from the banks, and that really indicates that the banks are seeing a strong fall in the cost of funding, and that gives them room to be able to move and I guess stir up a bit of demand in terms of home loans and in terms of their products. So altogether, things are looking extremely positive for the banks. We've seen a strong profit season this earnings season. We've seen some strong rises in terms of dividends, and the cost of funding is falling, which is good news for the banks. The RBA is on hold, but still there's a capacity to cut rates from the big four banks. So altogether, the environment for the big four banks looking better, cost of funding is falling, and that's a huge positive for the banks.
Jeremy, some interesting news. Some parties expressing an interest in buying all of it or parts of the company. They've opened up a data room. Not that long ago, though, they knocked back GPT at a premium off of some of their businesses.
We are watching Australand very closely. It has opened its books, and the stock was up by 1.2%. If we have a look at Australand, it's a staples security, so it involves 3 different units, and that's the development units for the residential, the industrial and the office area, as well as the property portfolio. Now, the property portfolio is where the stable, quite boring annuity style of earnings comes from, and this is just from the rents from their property portfolio. The other part of the business is the development part of the business, which tends to be more volatile in terms of earnings. Now, I guess if we have a look at Australand, we've seen a couple of parties already interested in Australand. So that's GPT as well as Mirvac. Now, with GPT, they were only really interested in the industrial and the office part of the portfolio, not really the residential part. So that bid failed, but also Mirvac interested. So it does look like we may see a bid coming out of the opening of the data room. Australand shares doing well today on the market, 1.2%. This is one we're going to be watching over the coming weeks to see if anything comes of it.